This is the weekly review for the week of October 31st to November 1st. So this week I said I was going to focus on S&P because I really wasn't too sure on what Euro wanted to do, um, and I'm still not pretty clear on that. So um, coming in on Monday, I was anticipating that price wanted to trade up a little bit deeper into the weekly range premium and take out this daily high right here, as well as potentially come up into this daily fair value gap. So originally I thought we were going to have a bullish week because we had this daily order block here. So I was anticipating price here on Monday to come trade down into this daily order block and then come up into this daily fair value gap and take this daily high. So on Monday, I was looking for a short setup down into that daily order block and also this H1 fair value gap that was inside the daily order block. And nothing really happened until lunch session. We just started trading down, respected this M15 fair value gap, and then we basically created a swing low right above the high of that order block and that H1 fair value gap. And then right here at just before lunch, we had a SMT with London high, a failure swing, and we also took out the New York interim high, broke market structure down, and then the RTO to this M5 fair value gap in premium occurred during the lunch session. So I was away from the charts at that time, but this trade ended up playing out. So because when I came back in the PM session, I saw that we broke market structure here, I decided to set limits for a demo trade for an institutional order flow entry drill, and I entered in at this M5 fair value gap and put my stop above here. There was an M3 fair value gap in here, so I put my stop above that M3 fair value gap high, or else it would have been above this M5 fair value gap high. And to be honest, this wasn't the cleanest entry just because this was a pretty small fair value gap. Usually I like these very large ranged fair value gaps. And the trade did end up playing out here, but it came zero point 0.1 pips from my, or points from my stop loss. So I almost got stopped out here, but then it went and it hit the 1.3 RTP. And I was also anticipating consolidation on this day, so I wasn't expecting any of these lows to be ran out because Friday we had this big range expansion. So after large expansion comes consolidation. So I was just basically looking for a very small scalp here and just for price to stay in this range, which it eventually did. So Tuesday, or by the end of Monday, I thought that price was setting up pretty cleanly because we had a Monday consolidation. This swing low right above the order block high. This looked like bait to me, and I thought that on Tuesday we were going to raid Monday's low into the order block fair value gap and get a setup to trade up to that old daily high. This daily high back here. But we ended up doing the opposite actually. Overnight Asia and London session, price just drifted up higher. Had a little bit of displacement here, return to the fair value gap, and then right here during or just before the 9:30 open, we took Sunday's high right here, and we had a SMT with NASDAQ, broke market structure here, and had this very aggressive displacement down. So right when this swing low formed here on the M5, I set a short limit inside this fair value gap, but we ended up just continuing to trade down and eventually took previous day's low and dipped into that order block. But as I said, it happened in the opposite way that I was anticipating. So then in the PM session, I was looking for a potential scalp because we took previous day's low into the daily order block, and we had a SMT here. And I was seeing if we could get a small move up into this low resistance liquidity run. Again, I was anticipating consolidation, but I thought we would still be able to get a nice little scalp 1.3R trade here, but nothing set up. So then Wednesday was FOMC, so I just completely stayed away from the charts. But it actually turns out there were 3 pretty clean setups during FOMC. So just on the hourly chart, in terms of the narrative, instead of coming down into the order block here and fair value gap and going deeper into this daily fair value gap up here, we formed the high of the week on Tuesday and then had this displacement down, right? And then this is the weekly order block. So we created a false high or an interim high here for that to be rated. And again, this isn't displacement down. So this high was just bait to build up buy side liquidity. And then that's when it got rated here with SMT. And then we had that real move down. And on the hourly chart, we see the mentorship setup on a H1 where we took buy side, broke market structure, had this fair value gap in premium, and FOMC returned up into it and sold off. But on the M5, there were 3 setups here. So prior to FOMC, we just had consolidation and built up these relative equal highs. But just prior to 2 p.m., we had a setup form where during lunch we rated previous day's low, and we had a SMT with US 30 and had this displacement up here and created a fair value gap in discount. And then price respected it. Probably your stop would have been hit due to the spread, so it's still probably not a good idea to trade this, but it's nice to see that it had some at least clean price action. And then we took out these, again, relative equal highs, came back up into the H1 fair value gap on the higher time frame mentorship setup. And then off of that, we had another setup form. So this was the Judas swing. Then we took out these stops. There was no SMT here, unfortunately. But then we had that next mentorship setup, displacement down, come back up into this M3 fair value gap in premium. And then we had this institutional order flow entry drill in premium as well from that M3 3-minute high to this 3-minute low. And then that ended up trading down. So at this point, it was pretty clear on Wednesday that the high of the week was set on Tuesday back here. So coming into Thursday, I pretty much just anticipated consolidation because of the large range that we had during FOMC. But we didn't quite get that. Price just continuously ended up drifting lower throughout the night London session and the beginning of New York session. And then we ended up rating previous week's low, and we had an SMT with US 30. So I was watching for a short-term trade here, but there was no fair value gaps formed here, at least on the M5. There was one on the M1, so from that dealing range low to this high, we came down into a discount here and then traded up. So, but I don't really enter in on the M1, so I was just waiting for an M5 dealing range, and we got that here from this low to this high, and I set limits here, and I ended up getting stopped out, and then price reversed and hit take profit. The same trade setup that formed on US 30 ended up playing out, and US 30 respected its fair value gap low. And the only difference I noted between S&P and US 30 is that US 30 had the failure swing. So US 30 did not take its previous week low, where US 500 did. So US 30 was the stronger pair out of the two. So that's the only difference that I noted in terms of why the US 500 trade did not play out. And then moving on to Friday, we had NFP, and Thursday night I was looking at the daily chart. So this was Thursday's close. We had a daily break in market structure, and we formed this daily fair value gap here. We also had this daily breaker and this daily order block. So I was anticipating that non-farm payroll was going to manipulate up into this daily fair value gap into premium and then sell off. So we did get that. And the dealing range that I was using was the hourly or H4. So we didn't form a daily swing low yet, which is why I decided to use this swing high instead of the daily swing high up here. And we had a fake setup after taking previous day's high. So I did end up taking the setup, and looking back, I see that we basically had two setups, a bearish setup here and a bullish setup. So even though there was no fair value gap here, we took this sell side liquidity, then came up and took this buy side liquidity, and we had a SMT with NASDAQ. So I noted in my journal that this probably wasn't the highest probability trade, because this break in market structure down here, forming the fair value gap in premium, was also a potential RTO for the bullish raid here. And also considering its non-farm payroll conditions, where they're just trying to take out liquidity on all sides of the market, this short here would not have been extremely high probability. And that's, I believe, why this second bearish setup that formed on the M1 did end up playing out, where this one didn't. So we ended up taking the buy side above this high here, and there was no bullish setup like there was here. And also the time of day was 10:40, so just based on the daily Power 3 candle, we could have a high probability that this is the high of the day priced in. And on the M1, we had that mentorship setup. And we also hit the premium. That's this line here. Right. So this may have been, for me, a little bit of FOMO because we did not get up into premium, but we had everything else looking nice in terms of significant liquidity rated above previous day's high with SMT and displacement, but we just didn't get up into that higher time frame premium, and also had that opposing setup here with the sell side liquidity rated. So yeah, those are just the two things that I noted in my journal as to why this short setup wasn't high probability compared to this one here that formed on the M1. So I did also end up having limits for a swing trade here, entering in at the mean threshold of the H1 dealing range. So I'm in that right now. In terms of what I think for next week, we now formed a daily swing low, so we could come up and take Friday's high and form a lower time frame mentorship setup here, and then come down to take previous week's low. So I think that is the most high probability thing we could do, because we have this monthly SMT with US 30, clear displacement down from these PD arrays in premium, and now we have this new daily dealing range set up. So if we're going to form the high of the week, we could come up into premium of this daily dealing range. But also I realize that at the same time that doesn't need to happen, because we already hit the breaker and the order block and already dug up into the fair value gap. So we could also just see this roll over. But yeah, I also noted that we are in discount of this bullish dealing range from that low to that high, and this order block is in discount of the bullish dealing range. But because the higher time frame weekly and monthly are bearish, I'm anticipating this daily order block not to hold, and us to look for the sell side below this low and this low. So we'll see what ends up happening. If we end up coming up and taking Friday high, previous week's high should not be touched. It just doesn't make sense for price to come up here and take that and then take previous week's low. Even though we do have very high impact news this week with the U.S. Congressional elections occurring on Tuesday, and then the CPI report happening on Thursday. So there's going to be a lot of volatility this week. But yeah, we'll see what ends up happening. It's probably best to just wait for Monday price action and see what happens from there if we get, again, that mentorship setup taking out this high. Really, I don't think this high either needs to be taken. But yeah, we'll see what ends up happening. Just a note on my Bitcoin swing trade that I spoke of probably a month ago. I ended up closing out both positions because I did a new top-down analysis this week for Bitcoin, and to be honest, since it's just been consolidating, I don't really know where this wants to go right now. So I took or entered in my first position in this daily fair value gap here after we came up into premium of the weekly range and then displaced lower. So I got in around here in this daily fair value gap. And then after we started displacing down here, I set limits in this daily fair value gap, and I kind of like forgot about it because every time I glanced at Bitcoin, we were just consolidating, so I really wasn't just looking at the chart. And that sell limit got activated here last week. But again, and I was targeting these daily or weekly equal lows. That's my draw on liquidity. But since we just had this consolidation for a month, I'm not exactly sure that Bitcoin wants to roll over. And price is also in the mean threshold pretty much of this consolidation. So this is not a high probability condition, so that's why I just ended up closing both positions here. And I'm just going to watch previous month's high and the August high to see if price wants to take those. But basically, just a note for me, I want to see a displacement in one direction or the other to know or to have price tip its hand where it wants to go. And then for the dollar index, don't really see anything on this either. It's just been consolidating for the past month. We've used this weekly order block several times already, and even taken sell side inside that order block, came up, and now we just ended up coming back down. So I don't really know what this wants to do. Same thing with Euro. Indices are really the only clean asset that I'm looking at right now. That's why I've just been focusing on that. So we'll see if the high impact news this week with obviously the elections, I think that may be the reason why a lot of this stuff is consolidating. And after the volatility comes out from whoever wins the elections, we're going to get some more trending price action. So yeah, we'll see what ends up happening. Good luck and good trading.